So from the production order, we are able to determine the direct and indirect material. So direct material directly goes to the job cost sheet and through material requisition form, right? Because how we know that material, how much material and how much worth of material is used, that we see our material requisite form, and then direct material costs are allocated to job cost sheet, and direct material costs are charged to a specific job, and then indirect material costs are included in manufacturing overhead, and we're gonna calculate it in advance through predetermining overhead rate, and then we convert our predetermining overhead rate and we multiply with the actual activity, and then we compare the estimated one with the actual one. So the next would be, we basically find out direct labor hours from where? From the direct labor hours form. So basically ticketing, employee time ticketing serve as a direct labor hours uh, form. So if the employee work 10 hours and its per hour rate is 15, then 150 will go to job cost sheet. And indirect labor, we cannot allocate to the specific job, then it means we need to estimate that one, so it will be allocated to manufacturing overhead. So the last one, that is indirect materials and indirect labors are a part of manufacturing overhead. So other overhead costs are charged to manufacturing overhead as well, like the amount of grease, amount of electricity, janitor work, this kind of stuff. So as we have seen that the predetermining overhead rate is used to apply manufacturing overhead cost to the job. So here all the indirect material, other the overhead charges and indirect labor hours, it goes to the job cost sheet through estimation of predetermining overhead rate, right? And then we add it, we find out that this would be our cost, we divide it with the number of units completed, and then we find out unit product cost. So let's move towards our next learning objective. So here I am combining learning objective 4 with learning objective 7. So learning objective 4 was to understand the flow of cost, which we just completed in our previous slides, and the part of our learning objective 4 was prepare appropriate journal entries to record the cost. Our seventh objective is the use of T accounts to show the flow of cost in Java costing system. So again, I'm repeating that the journal entries logic and introduction you will learn in your financial accounting, or I hope you already learned it, or those students who already passed this principle of accounting or financial accounting course, they do understand that how the journal entries are made. The objective here to understand how the cost flow from one account to another account. If you do not understand the logic of debit and credit there, then don't worry about here, you will learn in your principle of accounting subject. So let's move forward. So here the transaction in the T accounts, it is presented in the following slides. So let's go. So here part 1. So when the raw material are purchased, they are debited to raw material inventory account and credited to accounts payable, right? If you purchase the raw material on account, the entry in the raw material account would be here. So part 2, it would be the cost of direct material requisite are debited to the work in progress and added to the cost job cost sheet, which serves as a subsidiary ledger. So when you use the material is decreased or credited from the raw material and added to the work in progress sheet, right? So which is also job cost sheet. And the indirect material, it would be added to our manufacturing overhead, right? So the part 3 is that to account for indirect material requisite, the manufacturing overhead account is debited and raw material inventories account is credited, right? Now moving towards our next slide. That is, so what will be the entry here? So here is an example of journal entry to record the purchase of raw material on account. So what is the entry? We basically debit the raw material account and credit the accounts payable, right? So let me just give you the reason is that when assets are increased, we make it debit. When liabilities are increased, we credit. And our rule for journal entries from debit to credit. So here, our raw material asset increase in assets, so we debit it, and our liabilities increase, so we credit it. So that would be the entry. So here, when materials are requested from the raw material inventory, we debit the work in progress, right? When work in progress is debited, the entry would be work in progress to raw material. We decrease the raw material, and the indirect material also basically decrease our raw material. So manufacturing overhead is also debited against raw material. So this entry is basically a combined entry of debit, and credit.